All right, how's it going, friends and family? My name is Amos, and today we're going to be analyzing Waste Connections, ticker symbol WCN, and the goal is to make the final product about 12 minutes or less. So if that sounds good with you, let's go ahead and get into it. And as you can see on your screen right now, Waste Connections is actually headquartered in Canada, but they also publicly trade on the New York Stock Exchange, and that's the one that I'm going to be referring to because I'm an American. If we take a look at them year to date, negative 0.7%. Past 5 years, 60%. If we do maximum timeline, 5,800% into the green. So in order to analyze this company, what we are going to be doing in this video is I'm going to share with you my position first and foremost. We're going to be calculating a fair price for their stock. And number three, we're also going to be placing them onto the compounder chart. And as a man of my word, here's my position. I have 17 shares at about $169 a piece. So my cost base is $2,877. My total return so far, I'm in the red, $11.19. However, once those dividends hit my account, I should be break even. Needless to say, it's pretty early whether or not this is going to pan out to be a smart decision. So I'm going to try to defend my case as to why I invested into Waste Connections. And in order to do that, first and foremost, let's take a look at what is Waste Connections and how do they make money. So Waste Connection runs a non-hazardous waste disposal operation with reoccurring revenue from residential folks like you and me and commercial customers like Dollar General. You can think of them as a utility company because everybody pays to have their trash picked up twice a week. Because at the end of the day, you don't want a landfill in your backyard with piles of diapers, doggy poop bags, and whatever else that you ate throughout the week, right? If you want your trash out of sight, out of mind, that costs money. Hello, Waste Connections. And what makes them different from their competitors like Republic Services and Waste Management is that Waste Connections, they focus on secondary and rural regions in North America. They avoid major metropolitan areas because it's not their territory. And think about it. If they were fighting it out in Detroit, Chicago, or New York City with like Republic Services, then they would have to lower their margins in order to be competitive against the other trash collectors. That way they can win the contracts with the municipals and whatnot. And because they stick to the countryside, they have a wide economic moat. And think about it like this. When you move into a neighborhood, you don't have a choice. You don't really have 3 or 4 or 5 options to pick from to decide who's going to pick up your trash. It's already set in stone. So their business model, I think it's so amazing and it's simple. And the whole idea of them trying to find new customers, it doesn't really matter. If someone moves into the house that someone just moved out of, there's your new customer. And if they expand their territory, boom, that's 50 more families in that neighborhood that are now paying Waste Connections in order to take away their trash. So moving right along, let's talk about the recent developments that are surrounding this company. So October 21st, which was my birthday, and apparently it's also Will's birthday, Waste Connections announces an 11.1% increase in their quarterly dividend payout. Dude, that's absolutely insane. To be growing your dividend 11%? Dude, sign me up. But more importantly, on October the 21st, they reported their Q3 2025 earnings, and they beat the bottom line expectations, but they missed the top line forecast by the tiniest margin. But instead of focusing on the negative, they bought back 1% of all the shares outstanding, and I guess overall, their earnings, it was a mixed bag. It was mostly good. I would argue like maybe 75% good. But there was also a little bad. The money that they make from selling recycled materials and their green energy credits, it fell by 30% in comparison to last year. That's a pretty big drop off, and that's because this current administration, they're not really renewable energy friendly, or the green movement is out the window, at least for another 3 years. So they did take a hit, but was it that big of a hit? Well, let's take a look at their numbers. So right now I'm on a platform called stockanalysis.com. If you sign up using my referral link, you get a discount on top of whatever promotion they've got going on. I'm going to jump on over to the financials tab. First thing that I want to take a look at is the income statement, break it down on a quarterly basis. Did it have that big of a hit? I think a little bit, right? The revenue grew 5% year over year, but I feel like if that 30% hit did not happen, it would have been at least like a 10 or 11% growth year over year. But in the grand scheme of things, taking a look at their top line, this is exactly what you want to see in a business operation. Especially as a shareholder, I don't want to see something that is consistently volatile, up and down, or in a negative trend like Sirius XM, right? But going from, 2015, $500 million in 90 days to $2.4 billion in the last 90 days for them, that's exactly what I want to see. If we scroll on down and take a look at their bottom line per share, it was $1.11. And this right here, December 31st, 2024, negative 76. I'll expand on that when we do the inherent worth calculation for their stock price. And it is important to keep in mind that this is a CapEx heavy business operation because landfills, garbage disposal facilities, all of the trucks and whatnot, there's a ton of CapEx. So you wouldn't expect their free cash flow to be phenomenal. But in the case and example of Waste Connections, you tell me, does that look good or does that look pretty good? I mean, in 2015, they generated $43 million of free cash flow. What do I mean by free cash flow? It's the amount of cash that goes into your pockets after funding for the operations, the actual cash. Because when we think about the income statement that we just looked at, that's on an accounting basis. You can manipulate and financially engineer those numbers to the point where it looks like you're profitable as a business, but you're really not. The free cash flow tells you how much cash they actually generate. For a CapEx heavy company, I mean, this is just phenomenal and actually pretty darn impressive. Past 90 days for them, $380 million of free cash flow. And at this point in the video, let's go ahead and calculate an inherent worth, a fair price for Waste Connections. And the first one is going to be predicated upon their dividend profile and the growth rate of their dividend. Take a look at your screen right now. Pay attention. Pull up the pants, put down the ramen, look at the numbers. The dividend yield, I understand, dude. I get it. It's nothing to write home about, 0.7%. But what really makes my armpits sweaty is their dividend growth rate of 10.6%. If we round it up, 11%. I would argue that's a pretty juicy dividend profile. 53% payout ratio. That means about 53% of their profits are utilized to fund the dividend itself of $1.26 per share that you own. Now, I'm not a betting man, and I can't tell the future, okay? I'm an idiot. I think eventually their yield will get higher, maybe like 20, 30 years down the road. It might be like 3 or 4% as the dividend growth rate starts to slow down and hits a more modest number, like a 3 or 4% growth rate year over year, and the stock price does not appreciate and grow as fast. The reason why their dividend yield is so low is because the share price is outpacing the growth of their dividend. Does that make sense? 10.6% is the growth rate of their dividend. That means their share price is going up so much that the dividend yield can't catch up. Because it should be realistically closer to like a 1.5 or 2%, especially when you take into consideration one of their peers, right? Waste Management, 1.5%, Republic Services, 1.1%. But for Waste Connections, I like what I see. And it's not just a 1 year, one off, oh, they grew it by 10.6% because just one time. No, when you take into consideration the past 5 years, they grow their dividend on average at a rate of 11.2% year over year. That's consistent. That's what they do. That's the numbers that they pull off. Now that we understand their dividend numbers, let's jump on over to their dividend discount model. Now, even though we understand that their dividend growth rate is somewhere between like a 10.6 to 11% historically, we want to be safe. We want to plug in numbers that are not too aggressive and not too optimistic. So we're going to shave that by almost in half and make the assumption that their dividend growth rate going forward into the unforeseeable future will be a 6.2%. If that pans out, then Waste Connections right now should be $212 a share. Is that out of the ballpark? Is that possible? I mean, in the past like 1 year, I think they flirted with $212 a share, so I don't think that's an outrageous price. And the next valuation model is going to be predicated upon their price to earnings and their EPS. Now, what you see right there is what they pulled off in Q1 of 2025 all the way up to Q3 of 2025. The forecast from the analysts that are covering this company is $1.29. You tell me, does that sound outrageous? Does that sound impossible of a task? I don't think so. I think that's pretty realistic, so I put Yes. So if they do pull off $1.29 in Q4, when you take into consideration October, November, December, then for fiscal year 2025, their EPS will be $4.45. But something that I do want to call out is if you pull up Waste Connections, you will see that their PE is a 70.1. And it might sound outrageous and it might sound like a scandal, but having said that, if you apply their forward trading multiple, it's a 30. So their PE is a 30.4. If you look at it from the present tense, 70.2, and that's because they took a large one-time hit on one of their landfills, including impairment and closure costs that happened roughly a year ago, which temporarily made their EPS look like straight doo-doo. Do you remember? I'm bridging the gap now from what I said I would for Q3 of 2024 when their EPS was negative 76 cents. And because of that, that made their overall EPS for the trailing 12 months look like a smaller number than it really is. So if I go back up here and I put it to the annual tab, then you will see that their bottom line per share is $2.40. It shouldn't really be that low, and that's why their PE is artificially pumped right now. But everyone that assesses and looks at Waste Connections, we don't think of them as having a 70 PE. We look at them as having a PE ratio of a 38. That's their realistic PE, okay? And I got that by dividing their stock price, which is roughly like $168, $169 a share, by $4.45. That gives me a projected PE of 37.9. If that pans out, then friends and family, by the end of this year, which is about a month to go, Waste Connections, realistically, 168.66 cents a share, which means as of right now, they are fairly valued. However, their historic PE ratio for the past 10 years, on average, has been a 64.6. This is a company that usually trades for a premium because it's a very high quality business. So if they pull off $4.45 of bottom line per share and they continue to trade at a PE that's around a 64, because right now they're at a 70, right? Then Waste Connections could close out the year at 287. Do I see that happening? Absolutely not. And I say that as a shareholder of Waste Connections. If I wanted to be biased and I wanted to be ugly and I wanted to be smelly, all right, we're getting too personal right there, then I'd be like, yeah, dude, 300 to the moon, to the sky. And it's like, dude, if you understand the statistics and the numbers and the data, I don't see that playing out. Now, could they hit a number that's in between 168 and 287? Absolutely. I think a number closer to like 175, 180 seems more plausible. But in a bear case, realistic scenario, I think 168, which is exactly what they're trading for right now, seems to be the more likely outcome. And I'm not just making up the numbers to get a price. That's exactly what they are right now. I'm not. We got that from dividing their share price by the $4.45, which gives us a PE of a 38. And if they trade for a 38, which is about almost half of the 70 that they are right now, a 168. But if I were to be very shady and I were to be stupid and I could be like, well, because they're at a 70, I think they could also be a 70 once they pull off $4.45, then it'd be like Waste Connections 311. But does that make any sense? No, it does not, because that's not reflective of their true earnings per share. The real ones understand that about a year ago, they took a hit on the accounting math and numbers. And that's why, friends and family, a 38 PE is more realistic. Now, if we continue to play this game and we fast forward to like 2028 and they pull off $6.56 as their profits per share, also known as the earnings per share, and their PE jumps back up to what it's historically at, 64.6, but let's just go ahead and say 50. Worst case scenario, okay? Waste Connections in about 3 years from now, $328 a share. Roughly, you would have 2x your money invested into Waste Connections. But for whatever reason, if they do go back up to their historical 10-year, dude, my bicep vein is like, bruh, I didn't even work out this morning. But anyways, if they go back up to a PE of a 64.6, then $424 a share. All right? That's what the numbers say. I'm not making this up. This is just what the numbers say. But just because the numbers portray a story that says 328 in 3 years, that doesn't mean that Waste Connections could hit that number. For all we know, they could have scandal after scandal, setback after setback, financial, accounting probing, regulatory setbacks. and this company could go down to $20 a share. Nobody knows what's going to happen. The math and the numbers helps us to make a better guess and estimate of what could happen rather than just running a marathon after downing like a gallon of milk. Dude, you're going to be pooping your pants by mile 3. It's not going to be fun. I don't understand why people just guess and they just pile their money into a stock when they're at their 1-year high. Dude, there's so much more room for downside than there is upside. It's just, I don't know, it hurts my feelings. So I'm like, dude, you're about to put yourself into a world of pain. You gotta have a margin of safety. And that's not financial advice. I'm literally just talking to myself because I'm like, I'm delusional, I'm sleep deprived, and I might be a little crazy. So when it comes to placing Waste Connections onto the compounder chart, among the peers that we have covered on this channel in the past 6 months, if you wanna pause this video and you're curious about PayPal, we've analyzed them. If you're curious about Duolingo, we just covered them. It was a very unpopular opinion, but the facts don't lie. Sezzle, it's up there. Chipotle, Google, Amazon, go ahead. Where do they fit? If they go on the left side, I'm super bullish. They're in the S tier. If they're in the middle, they're grade letter of a C. If they're all the way to the right, dude, I'm just being stupid with my money. Why would I invest into Carter's or Chime Finance just to lose money? Okay? So when it comes to Waste Connections, believe it or not, in my opinion, they're going to be in the B tier certified compounder. I think they're better than the Trade Desk and Adobe, but they're not as high quality as the Mag 7. Like Google and Amazon, they're in the S tier, obviously. Meta, A tier. But I think they're right next to their peers of United Health, Salesforce, and Oshkosh Corporation, a very solid B. Now, something that I didn't mention earlier is they primarily grow their revenue from acquisitions. So by buying out the competition, small operation of like a trash business that has like 5 trucks and they're responsible for like 1 or 2 tiny little municipals, Waste Connections will go in and just buy them out and bring them under their arm, and all of their operations now belong to their portfolio. So that's primarily how they grow their top line. But they also improve their top line by increasing their rates for making that trash disappear. So in one fiscal year, you might have to pay like $38 every month in order to get your trash collected on Tuesdays and Fridays. And then the next year, it might jump up to like $39.50. So when you think about it, it's a toll booth business model. And by definition, why did I put them into the certified compounder category? By definition, what is a dividend compounder with cheese? No, it's not this Asian looking face, because I'll have you know I'm actually Nigerian. By definition, it's a high quality business with predictable cash flow, a wide economic moat, and a dividend growth rate that makes your nipple lactate. Like right now, as you saw in the beginning of the video, I have a newborn. My milk jugs, they start leaking whenever I take a look at a dividend compounder with cheese, especially if they're undervalued. I'm like, dude, sign me up. And the best part is, sometimes, not always, but sometimes, a dividend compounder with cheese, their operation is so freaking simple and their product or service is in such demand that a balding caveman can drive the ship and they can still thrive. It doesn't matter who's at the helm. It doesn't matter who the leadership team is. The company will still print cash. But anyways, if you put all of that together, the predictable cash flow, the EPS growing year after year, a beautiful dividend growth rate, and etc., my initial investment put into this hypothetical business will compound for the foreseeable future in XYZ amount of years. For instance, if I put down like $100 into a dividend compounder with cheese, I check back in my portfolio 10 years from now, theoretically, it should be $150, $200, even like $500 a share. That's a compounder. When I think about Ford, when I think about Chime and Carter's, will that $100 invested into them grow to a rate of like $200 or $300? I don't think so, and that's why I labeled it as a Kager graveyard. So jumping on over to my game plan, what am I going to do when it comes to Waste Connections? Should I sell out of them because they're fairly valued as of right now, or do I buy more shares? And I just wanted to circle back to the introduction of the video when we took a look at their total return. It only took into account their share price appreciation. I'm on financecharts.com. This should be free. This one bakes in the dividends that were also paid out from their stock market history. So if we zoom back 5 years, 62.4%. If we zoom back, then 548%. And if we do 20 years, we're talking about 677% total return, taking into account share price appreciation plus the dividends paid out. 7x'd my money into Waste Connections over 20 years. If I scroll down and take a look at their CAGR, breaking down that total return number year over year, in the past 20 years, I would argue pretty much the same as the S&P 500, 10.7%, 10.9%, negligible difference. If we zoom back in 10 years, then for Waste Connections, it's 18.6%, and S&P 500 was 14.3%. And then obviously in the past 1 year, their share price has been getting demolished, and that's why their total return looks like straight doo-doo. But for me, I see opportunity. So when I think about Waste Connections, I don't just think of this as buying a stock and then just hoping that it magically goes up. From looking at their numbers and digesting and analyzing their future, I like what I see. And the question that I asked myself before jumping in was, is it a business operation that I want to be a part owner of? And truthfully, my answer is absolutely. They have a resilient business model. It doesn't matter if the times are good or if the times are bad. Dude, trash collection and waste disposal, they're always going to be in business. Their business model is predictable and they have a freaking juicy dividend profile. Right now, I'm 35. I don't really care about the dividend yield. I care more about the dividend growth rate of the compounders that are in my portfolio. But more importantly, I think Waste Connections, it's one of those like sleep well at night type of business, right? There's no hype. There's no ups and downs. They're just in the business of throwing away our trash. A very simple business model that I think is pretty easy to understand. So I'm not trying to tell anyone else what to do, okay? But for me, I'm going to continue dollar cost averaging into them because I think they're a buy and hold forever business. 50 years from now, 100 years from now, trash disposal services will always be a necessity in our society because we don't want trash all over the streets. We don't want our rivers polluted. We don't want the pile of baby diapers to get bigger than it already is. We want it to magically disappear, and we're willing to pay for that convenience. So, I like Waste Connections. My question to you is, how do you feel about the garbage stocks? Are you bullish? Are you bearish? Let me know. And how do you feel about Republic Services or Waste Management? Because fundamentally, if I had to rank them, I would say Waste Connections. This is really unpopular and subjective, okay? I think Waste Connections is number one. Number two, I would say, is Republic Services. Number three would be Waste Management. But at the end of the day, I would be happy with any one of them in my portfolio. It's just for me, I feel strongly about Waste Connections because their differentiator and their economic mode of servicing the rural territory and areas where the other people just don't want to operate in, they really do remind me of Dollar General. Because they also try to avoid the territories that are dominated by Target, Walmart, and Costco. Dollar General also operates only in rural areas, the countryside, and consequently, they also have a wide economic moat. So that's my train of thought. And before you get out of here, on my walk with the dogs this morning in my journaling session, I just wanted to share this with you, okay? It's kind of cheesy, but stick it out, okay? One of the most fascinating aspects of life is this. If you don't like who you are right now, like you're stubborn, you're grumpy, you can't be corrected, you always think you're right, you're argumentative, you get road rage, you're overweight, whatever it is, you've got time to change that attribute, that variable. If you're anything like me, your past mistakes, they haunt you till this day, right? And bad habits, they turn you into a rotten egg. So it's kind of like a snowball compounding effect of negativity and bad choices just leading up and manifesting into who you are right now. Because we don't just wake up one day and become a grumpy, negative, cynical person, right? It takes time and events in our life that hurt us so badly that it turned us to be that kind of person. So just like dividend growth investing, becoming a better man and a better human and a better father and a better coworker, a better neighbor, it's a slow, steady, and intentional process. It takes time, it takes effort, and those small, diligent, consistent steps toward being the right man, dude, that can compound in ways that you don't even notice at first. Like, if you've ever tried to lose weight before or try to get back into shape, it doesn't happen magically overnight. It takes sweat equity. You got to go to the gym day in and day out. You got to be on that treadmill. You got to be jogging. You got to be watching your diet. And then after like 12 weeks or after 1 year, you start to see that transformation. You look back and you'll realize that you're just not the same person that you were because you invested in who you could become. About 3 or 2 years ago, dude, I was so freaking depressed. I was that guy that was just miserable all the time. I complained, and my train of thought and perspective in life, horrendous. I saw the worst in people. I never saw hope. I was just always full of bitterness, right? And I entered into this fitness competition here in Japan where they measured our initial body measurements of how much fat and how much muscle composition we had. And we were given, I think, like 180 days or 6 months to see who could gain the most muscle. And there would be prizes given to first place, second place, and third place. Lo and behold, after 6 months of putting that work in, working out almost every single day, eating the right foods, going to sleep on time, and deleting political commentary out of my life, I was not the same guy anymore. And after 6 months, I got first place. I forgot where I put the paperwork. I'll try to find it. It's somewhere in my closet or something. But in the span of about a half a year, I lost a lot of body fat and I gained like 15 or 17 pounds of just pure muscle mass. And that was life changing. And I'm at that point where I'm just trying to maintain it. Because once you get into shape, it's so easy to spiral back into the bad habits and just lose all of it, right? But if you just put in a little bit of extra steps day in and day out, it's easy to maintain. Well, not easy, but because you got to have that discipline to work out and to do the right stuff even when you don't feel like it. Just elaborating on that, dude, when I was in the thickest of my depression and I had thoughts of not wanting to be on planet Earth anymore, there was a point in time when I used to just drink an entire 6-pack and down 2 boxes of Little Debbie cakes as my meal. Like, that is what I was doing day in and day out. Like, how could I be happy when I was just trying to numb myself from the pain that I was feeling in my heart and in my head, right? By doing terrible actions like that. But once I started making the tough decisions to do the right thing that's good for me, that's healthy for me, even if I didn't feel like it, and I did that day in and day out, week after week, dude, I'm no longer the same guy anymore. So take it from me, it's not too late to change your life. Like, you might feel like you're stuck, but you have so much more ahead of you. Even if you're 45 or 55, you still have so much more ahead of you. It's never too late to take the steps to be a better husband, a better father, a better manager, a better employee, whatever it is, fill in the blank. It can start today. That's all I'm trying to say. I'm not trying to preach too much. I just wanted to share that with you because I journal every single day about my thoughts. And it's just one of those things where I feel like someone out there, you needed to hear it, right? On your commute to work, you're pissed off, you're disgruntled. Maybe this resonated with you. I don't know. With that said, I love you guys. Stay safe. Good luck in the stock market. And I will talk to you really soon. Peace.